Welcome back to Power Lunch. I'm Mike Santoli. This is Trading Nation. Market actually at session highs. Dow and S&P had a little burst to the upside just in the last few minutes, but doing it without the help of its biggest stock, Apple, still under pressure, nearly 3% lower today after getting hit with another downgrade linked to concerns around iPhone shipments and production. Apple now down about 14% from its recent high and on its longest weekly losing streak since 2012. So is this downturn investors' best chance to buy? Or is there possibly even more pain ahead? Boris Schlossberg with BK Asset Management and Wald with Oppenheimer to talk about that. Ari, Apple was really hanging tough in there through all the October weakness in the broad market, and now it has given up a lot of it. So as you look at the charts here, has the stock kind of given up the benefit of the doubt here or not?
I don't think so. It's been a tough week for Apple, but we see this as an opportunity. Tough week, even over the last month. Has retraced pretty much all of its gains following its last earnings report in July when it had the positive response. So levels I'm watching were still above, the big one being $196. The July earnings gap is there. Typically, you'll fill the gap, and that'll lend support. The stock's rising 200-day moving average is also there. And I think really what makes this a compelling story and why I think this pullback should be bought is looking at the action versus the market. That July strength marked a 6-year relative breakout for Apple versus the S&P 500. So we're correcting back into that major support level. Aside from some near-term base building, I think this is a terrific opportunity for long-term investors.
All right, so that would be about, $5 downside before you get to that critical level at this point. Boris, what do you make of the story here? Obviously, it's changed a little bit in terms of what investors are saying about it, but it also, the valuation's back down to below 15 times PE on a forward basis.
It is, but on the other hand, what you're seeing basically is that Apple, which used to be a hardware company that made all its money on hardware by creating a very, very pleasant software environment, is now trying to become a software company. And that transition is just not very comfortable for it. Because when you look at the flagship products, the iPhone, the iPad, and the Mac, all of them have been stagnant for the last 3 years. And now going forward, costs because of tariffs and because of inflation are going to go up, and their margins are going to go down. So that means, I believe, a price earnings compression as we go forward. Having said this, though, I'm not a bear on Apple. I just think it's going to be in a trading range right now. It has a $100 billion buyback behind it. So I kind of want to mimic what the Apple corporate is doing. I want to be selling puts effectively against the stock. This way, I'll get very good basis costs for long-term improvement position. But in the meantime, I don't want to be chasing the price at this point.
Yeah, okay. So selling puts means you're betting that the stock does not take off really to the upside, but also does not
exactly.
collapse.
I think it's going to be range bound and pretty much stay stationary for a little bit. Yes.
All right, guys. Thanks a lot for both sides of it. Boris and Ari, appreciate your time today. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation.
Daily price fluctuations of individual stocks can offer trading opportunities. However, if you're unhappy with your returns while trading actively, consider taking smaller positions over a greater investment time frame. Evaluating trends over multiple weeks rather than hours can help a trader locate more consistently tradable trends while possibly trading less frequently.